Welcome to Value Vest Daily, where we deep dive into the best value and momentum investment opportunities.
Today, we're talking about a company that might just be the secret engine behind the entire AI revolution. We're talking about Corning, ticker GLW. You probably know them for the super tough Gorilla Glass on your phone, right? But the real story, the one that has investors buzzing, is something else entirely. Let's get into it. So let's just get right to it. The question everyone's asking, how on earth did this stock pop so hard in the last year? I mean, what exactly lit the fuse for this massive rally? Yeah, you're seeing that right, an 88% gain in a single year. Now, this wasn't just a lucky break. This was the market finally waking up to a fundamental truth. Corning is absolutely essential for building the physical infrastructure that makes AI work. Okay, but that 88% gain, that's in the rearview mirror now. For us, the real question is what happens next. So today we're asking, after that huge run-up, is it possible for Corning to 5x by 2030? Let's find out. To figure out where Corning's headed, you have to understand its core business. The best way to think about it is like this. During the big gold rushes, you know who consistently got rich? It wasn't always the miners. It was the folks selling them the picks and shovels. Well, in today's AI gold rush, Corning is selling the essential tools. They're not out there making the flashy GPUs like NVIDIA. Nope. Instead, they're making the incredibly high-tech optical fiber and specialized glass that connects all those chips together. Put it this way, without Corning's materials, the data centers powering AI would literally go dark. And this right here is their massive competitive advantage, their moat. I mean, this isn't some startup that just popped up. We're talking about more than 170 years of super specific, super difficult material science expertise. And it's all locked down by over 10,000 active patents. You just can't wake up one day and decide to compete with that. It's nearly 2 centuries of innovation. Okay, now these numbers tell a really fascinating story. You see a solid $73 billion company, healthy margins, debt is totally manageable. But the real key here, the thing you got to pay attention to, is the PE ratio. The trailing PE of 55, it looks expensive, right? That's based on last year's earnings. But the forward PE, which is based on what analysts think it's going to earn next year, is nearly half that. That's a huge flashing sign that the experts are seeing some serious earnings growth coming down the pike. So where's all that growth going to come from? Well, it's coming from fueling the 2 biggest tech trends on the planet, AI and robotics. This is the story that has Wall Street so excited. And here it is, the heart of the whole investment thesis. The AI build-out requires a truly mind-boggling amount of data to move at the speed of light. And that means a massive, massive demand for fiber optics. As you can see, the projections for Corning's key optical division are for 15 to 20% growth per year, pretty much all driven by AI data centers. And we're not talking about your standard cable here. This is specialized, ultra-low loss fiber that lets thousands of GPUs talk to each other almost instantly. Their new stuff, like the Glassworks AI suite, actually helps the hyperscalers, your Microsofts and Googles, build out their data centers faster. In that world, speed is literally money, which makes Corning's products incredibly valuable. And hey, it's not just about data centers. Corning's materials are also crucial for the robotics boom. Their precision glass is used for the eyes of robots, all their sensors and vision systems, while their advanced ceramics are used in the joints and motors. It's just another powerful long-term growth engine for the company. Okay, so the fundamental story is really compelling, no doubt about it. But what do the charts say? Does the stock's price action agree? Let's decode the technicals and see what they're telling us right now. So, from a technical perspective, the picture is pretty clearly bullish. The stock is in a really strong uptrend. It's trading above all its key moving averages. That's a classic sign of positive momentum. And to put that into perspective for you, the short-term trend line, that 50-day moving average, is up near $85. But the long-term trend, the 200-day, is way down around 65. That huge gap between those numbers just shows you how powerful and sustained this recent rally has been. Now here's a really important technical point. After a stock shoots up 88%, you'd totally expect it to be overbought. But Corning's Relative Strength Index, or RSI, is just sitting there at a neutral 48.66. This is a strong signal that the stock has basically digested its recent gains and might just have plenty of fuel left in the tank to move higher. So the big question, does this mean it's in a buy zone right now? Well, the charts suggest the setup is pretty favorable. with a solid floor of support right around that $83 mark. And it's not just us who see the potential. Nearly 70% of the stock is owned by big institutions. That tells you the smart money has some serious conviction here.
Okay, we've covered the fundamentals, the AI growth story, and the technical charts. Now it's time to put it all together for the final verdict. Our price targets, potential returns, and of course, the risks you absolutely need to be aware of.
In the short term, over the next year, Wall Street analysts are looking for the stock to hit between $91 and $97. But if we look further out to 2030, our own analysis projects a price target closer to $191. That's a potential 122% return from today's price. So while it's not quite the 5x we asked about at the start, hey, more than doubling your money is still a massive opportunity. Let's make that a little more real. What does a 122% return actually look like? Well, if you were to invest $10,000 today, our projection suggests it could be worth over $22,000 by 2030. That's the power of investing in the essential infrastructure of the AI age. But of course, there are no guarantees in investing. You've always got to look at the risks. The biggest one here is valuation. If the AI hype cools down, that PE ratio could shrink fast. There's also competition from lower-cost manufacturers, and of course, a big economic slowdown could hit spending on new data centers. These are the key risks you need to watch. And as always, our standard reminder, this is all for informational purposes only, and it is not financial advice. Please do your own research and talk to a professional before making any investment decisions. If you found this breakdown valuable, please do us a huge favor and hit that subscribe button, give this a like, and share it. Our goal here is to give you clear, unbiased opportunities before you put your money to work. And hey, one more thing. We want to know what you want us to analyze next. Is there a specific ticker symbol you're curious about? Drop it in the comments below, and we might just do our next deep dive on it. Thanks for tuning in.